Welcome back. Time now for business, and for that, we're joined today by business and policy reporter for the New York Times, Lauren Hirsch, who joins us here at 30 Arc. Lauren, great to see you. So stocks rose in the U.S. yesterday, but they're still on track to end the month of February much lower than they've been. So tell us some of those forces that drove them down and how today looks like it's beginning.
So it's been a bit of a whiplash for 2023 so far. January was the best January since 2019. Last week was the worst week of the year. And that was really a reaction to some key inflation numbers we got in last Friday. There was some optimism at the end of 2022. Maybe inflation was cooling. Maybe interest rates wouldn't rise quite as quickly as some people were concerned about. Now it's a little bit back to the drawing board. People are thinking maybe the Fed will have to go more than 5%. So what you're seeing in the market is really investors having to grapple once again with the prospect of continued rising rates.
And all eyes will be on Jerome Powell yet again. So you wrote in Deal Book about China, which is certainly a country in the news, if you will, a lot swirling around it, and particularly this COVID lab leak theory. We know the Department of Energy has put out the idea that at least there's a possibility that this virus leaked from a lab there. There's not, definitive conclusions from other agencies about that. But it's still going to have an economic impact, you write, on both U.S. and Chinese companies. Tell us about it.
So as you mentioned, the White House had made clear there's no consensus. But yes, it comes at a time where there is huge uncertainty in the business community over what the relations are going to be between U.S. and China in the next year. And China is still an exceptionally important market for U.S. businesses. McDonald's is building out about 900 new stores this year. Starbucks is building out thousands the next several years. It's very important to them. And so as you see this rhetoric really ratchet up in D.C., and now they have, Republicans certainly have more reason to decry relations, you're going to see companies have to grapple with what to do and how to expand in China while still really staying out of the crosshairs.
So there had already been a little bit of movement to pull out of China as when the pandemic began. And some of that simply because just a lot of countries decided, like, hey, we need to do more stuff this at home and not rely on foreign supply chains. Has that, give us an update on how that process has been going and whether or not you think that'll accelerate here too.
So it's an interesting dynamic. Absolutely, supply chains has been a thing that U.S. companies have been thinking about at least since the pandemic. After Russia-Ukraine, that re-upped concerns because they began to think, well, if we had to pull out of Russia, well, we now have to pull out of China. So you absolutely see companies rethinking supply chain. But on the consumer front, I mentioned Starbucks, I mentioned McDonald's, plenty of others. China's reopening now. That's business. That's growth. Companies like growth. So the consumer-facing brands, they're still eyeing China. So you're really seeing companies grapple with these dual forces, and we're going to see them all respond differently.
And it seems like the last element of this would be if the U.S. determines that China is definitively helping Russia in its war, if sanctions come, that could change the equation even further.
It is one of the top 3 concerns in the boardroom across America.
All right, this is fascinating stuff, and we're going to be talking a lot more about it. Business and policy reporter for the New York Times, Lauren Hirsch, thank you for joining us this morning.